the investment decisions of the non-U.S. holders of U.S. government securities, well, that's treasuries, is the singular most fundamental characteristic that will determine if there is a long-term bull market in gold. So there you go. Monday, May 19th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at the markets, of course, seeing that the U.S. was downgraded from AAA on Friday, and now the U.S. doesn't have a AAA rating from the major rating agencies, of course. But we're also going to look at a pocketbook of gold, and we're going to look at a very interesting section. It's entitled Aphorisms of Gold. It's chapter 5, Meditations and Principles for the Gold Buyer. You could also call it for the gold stacker, right? But before that, let's look at more immediate and important things. And I think one of them is the fact that U.S. Treasury yields, especially in the longer end of the curve, and by that I mean from around 7 years to 30 years, yields there are rising relatively sharply overnight. Yes, treasuries trade everywhere around the world. It's a market that I'm very familiar with. It's where I started in the business, trading a lot of government bonds. And this is not a good thing. So, for example, the 30-year yield right now is right around 5%. I'm getting a quote of 4.99. That's on investing.com. It's relatively live price. The high has been 5, so we know that that's an important level. The 10-year, right now it's at 451. The high's been 452. The key level there is 4.8% and then 5%. So, for example, the 10-year yield is up 7 basis points and the 30-year is up 10 basis points. And why are these yields so important? Well, as I've said many times before, the U.S. Treasury market is basically the base of the whole dollar system. It used to be gold, of course, if we think of in terms of the inverted pyramid of liquidity that John Exter designed many decades ago. So what treasuries do is provide liquidity not just for the United States financial system, but for the whole world's financial system, even though that's waning now, the importance of the dollar, and is going to continue to do so. That's the way I see it. But yes, it's along with the foreign exchange market, those two, foreign exchange and bonds, are the biggest markets out there. It's not the stock market. Where prices are really set for all other assets, it's in the bond market. It's what the supposed top-rated risk-free rate of return is. And yeah, markets have considered the United States government that top-rated risk-free entity, but the faith and confidence is waning, and that's why it's really important to keep an eye on the Treasury market. And I have to say, looking at what stocks are doing, the markets are relatively calm, actually. It's not chaotic as some might have thought over the weekend, but it's still early days. Of course, it's only 7 a.m. London time. It's 2 a.m. Eastern time. We still have a lot of water. There's still a lot of water to cross under the bridge until the market opens, and we'll have to see the reaction of investors later on. So, for example, the Dow futures down only 300 points, not even 1%. The NASDAQ 100 is down 230, or just over 1%, and the S&P is down about 0.9%. So fairly quiet. The dollar as well is not really moving that much. It is a little weaker, but around 0.25%, I would say. What about gold and silver? Well, gold is up $22 right now at 32.25. The high's been 32.50. That's 3,250, of course, and the low has been 2,302. Silver has underperformed a little bit. It's at 32.40, up only 12 cents. The high's been 58 and the low has been 21. So yeah, it's been surprisingly calm, not very volatile market. The VIX index, for example, that's up 5%, but it's still around 20, the volatility index. So yes, keep an eye on Treasury yields. That's very important because it's they're indicators, prices of financing credit, and they're translated into other securities like mortgage-backed securities, corporate bonds, junk bonds. It's the rate that's used to discount forward cash flow, to discount prices. So the higher bond yields go, the more negative it is for earnings, i.e. stocks. It's all related. So I'm going to put a link below in the description to where you can keep track of US Treasury yields on investing.com. It's free. You don't have to subscribe to anything. Rudy is here. He's in his bed right behind me. We've already been for a walk, and we've got the builders coming in about an hour. So that's why I've been doing my videos a little earlier. But before we look at this and the aphorisms of gold, and for those of you who don't know, aphorisms mean like the truth about something. I had to look that up. I wasn't too sure either. So before we go further into the aphorisms of gold, just want to give a shout out to a couple of my affiliates. One of them is Wide Awake Clothing. So what's Wide Awake Clothing? Well, it's thought-provoking designs to awaken sleeping minds. So there's a link below in the description to Wide Awake Clothing. Go have a look and see what you think. You might like it. And the other one, of course, is Dirty Man Safe. There's, in my opinion, no better way to keep some of your valuables safe than Dirty Man Safe. Yes, and you get 10% off if you use my link below in the description. So yeah, a pocketbook of gold, a survival manual for monetary mayhem by Jim Sinclair and Peter Carlin. And this book was written in around 2010, 2011. Does it mean that it's wrong, that they didn't get it right? I don't think so, because these things take time. A monetary crisis like I think we're seeing right now takes time to brew, and the US dollar has been the bastion of the monetary system since the 1940s. And there's been really no substitute. They've been able, and by they I mean the powers that be, academia, Wall Street, the economic profession, they've been able to denigrate and keep gold out of the limelight. But that's changing very quickly, in my opinion. Of course, I've known about this for over 20 years, but I know it's really hard to get this book, and if you can get it, it's really expensive. So what I'm going to do is a few pages on the aphorisms of gold. I'm going to put it on the screen here. You can freeze the screen, you can do a screenshot and keep those, and then maybe you might want to type it into a document so you have all the aphorisms of gold. So let's get to it. Chapter 5, Aphorisms of Gold. Meditations and principles for the gold buyer. These aphorisms are to be meditated on, not read through. That is because only when they're considered in some kind of isolation and dwelled on is their power revealed. They will lead your intellect through a pathway of considered reason. Pick one, only one, at a time and spend a few days contemplating it. If you do it right, it will be highly educational. Well, that's really just one every day. There you go, and spend a few days contemplating on it. And I have to say, a lot of times when you get volatility in the gold market, where you get a lot of the naysayers, people saying gold is going to correct to 1800, it kind of shakes you a little bit, and then you remember these aphorisms, and I think that's a good thing, and I think it's going to get more and more psychologically tough. Yes, it's a psychological war, because the powers that be, they don't want you in gold, and they want to control you. So they can't control you if you're self-reliant and if you're sovereign financially. So the first one is gold is currency, and there are a lot of people who say it isn't, but it is. Second is gold is competition to paper currency. Of course it is. Gold is not a commodity. That's right, it's not a commodity in the sense that it's not like other commodities, but I would say it's a commodity money. But anyway, gold is a barometer of fear. There you go. And I think that's where we're going in this bull market in gold. It's fear, not greed. Gold is a barometer of confidence in government. Well, how many of you have confidence in government? Well, me at least, I've never had confidence in government. Gold is insurance. If investment is your goal, then look at gold as insurance. Gold is insurance against governments gone mad. Well, I mean, that's really, really appropriate now, isn't it? Insurance is not something to trade. Gold is money when money fails. And by that I mean paper money. I think that's what Jim Sinclair meant. Inflation equals money squared. Hyperinflation is a currency event, not an economic event. Yet people think it's a culmination of inflationary policy, but it's not. It's got nothing to do with cost push inflation, as they call it. Hyperinflation is a currency event described as a loss of confidence. Gold is financial high ground when a global tsunami hits. Gold in your hand eliminates counterparty risk. Gold removes financial agents between you and your assets. Gold ETFs defeat the object of investment. There you go. I've always told you, forget about ETFs. Most ETFs are dangerous. Many are an outright swindle. Claims on gold by ETFs far exceed anything that the true physical realm of gold could ever provide. Well, there's the leverage, there's the LBMA summarized in one sentence. Never leave money with a coin dealer. Never buy gold in a pawn shop. Never buy gold over the internet. Well, I don't know about that. That's kind of changed a little bit back then. And I think he probably meant from like private parties. The velocity of money represents the attitude of consumers of all types, from businesses to the householder. The investment decisions of the non-U.S. holders of U.S. government securities, well, that's treasuries, is the singular most fundamental characteristic that will determine if there is a long-term bull market in gold. So there you go. That's one of Jim Sinclair's pillars, and I think that's happening right now. And it's going to accelerate after the downgrade by Moody's. Every single major currency is a paper asset backed by nothing whatsoever. The combination of rising long-term interest rates coupled with soaring commodity prices is the scenario policymakers at the Fed are scared to death of. Well, it's pretty much where we're probably headed. Fighting deflation is what makes gold go up. Fighting inflation is what makes gold go down. The central bank tools to fight deflation are just what a long-term bull market in gold is made of. The central banks of the world are now fighting deflation, not inflation. That is what bull markets in gold are made of. And by deflation, I think he means the deflationary collapse of financial assets and the economy, not necessarily the CPI. The only way to expand employment is to trash the dollar. There's no way to drain the excess liquidity from the market. Liquidity cannot be drained because the economy would disappear. That's right, in a black hole. The current account deficit is the speedometer of the flow of US dollars out of the USA. A weak currency is a symptom of inflation in the monetary system. Inflation is not a result of a weak currency. Markets are always with us, so no opportunity lost is your last opportunity. Behave accordingly. Yeah, don't think you missed something and you're never going to be able to get another opportunity. That's what he means. Be patient. Margin in anything gold is a killer. There you go. Fundamentals tell you what to do and technicals tell you when to do it. XAU is not a clue to the gold market. I think he means the HUI index. COMEX is nothing compared to the gold cash market. Take 2 minutes of silence before and after you do your market analysis. The unique nature of gold is that it has no life of its own. Rather, it is a measure of other developments that cannot and will not be silenced. The price of gold has many enemies, but the most seditious are those who claim to be friends of gold. The absolute majority of gold advisors. The simple explosion in all manufacturing nations' liquidity will be the motivating factor that fuels the commodity market's explosion. The economic errors of the 1960s, which gave rise to gold's explosion from 1970 to 1980, are kindergarten mistakes compared to what is going on today. I agree. In order to know gold, you must understand what is occurring in the dollar and long bond markets. There you go. These three make up the universe of international money flow and investment and are at the top of the food chain. This crisis in economic and political leadership, as viewed from outside the USA, is primary factor driving gold. COT is no longer in control. Commitment of traders. Those are the bullion banks. That's what he means by COT. Currency will control gold from now on. All paper currency represents is a politician's promise. How much is that worth? COT no longer has the ability even to dunk gold the way they did before. This is true because COT cannot control currencies. We are legion and they are only 6. I think he means the bullion banks. They are scared to death that they cannot frighten you anymore. They are undercapitalized due to money management and they will not get 1 cent for maintaining their short positions. They must cover. Gold eliminates humans from your investment formula. So earlier he said they must cover, and you can see that not Goldman Sachs, well, Goldman Sachs as well, but JP Morgan calling for $6,000 gold by 2029. They know they're going to have to cover. Gold is the only currency that is incorruptible when the world is totally corrupted. Hunting for a moral, honest, and ethical person in Sodom and Gomorrah is easy in comparison to what we have to offer in America. No wonder the dollar is sold on every rally. We live in a society of economic deceit that can unwind at any time. Do you want that to happen without having any protection? Study history or become history. Gold is liberating. So there you go. I'm going to stop right here, and I'm going to wish you all a very good day. And let's keep an eye on the markets and take care. Bye.